Hey everybody, welcome back to Green Spud Trades. Tomorrow afternoon at 2:20 p.m., there's going to be a nationwide test of the presidential alert system, which means that your cell phone is going to display an alert from the Federal Emergency Management Agency as a test. Here's an article from NPR talking about this nationwide alert. It's kind of like an Amber Alert, but it's for other types of emergencies. And this one's a national alert test. And the test is scheduled to begin at 2:20 p.m. Wednesday, October 4th. That's tomorrow from when I'm filming this video. I'm here to question, does this mean anything for the stock market? This is not the first time that such a test has been conducted. A similar test was conducted almost 5 years ago to the day on October 3rd, 2018. Something that I thought was really strange about that test of 5 years ago was that almost to the exact minute that the test occurred, the stock market began a drop that continued all the way to the very end of the year, signaling a 20% bear market correction. So let's take a look at the stock charts and piece together exactly what happened. I'm going to be using the TD, I guess it's now the Schwab Thinkorswim platform to rewind in time. They have an on-demand feature where you could go back and look at historical charts for backtesting. And this is a good way of getting a view of what stocks were doing at any point during the day. You can see the trading action. So I rewound it to October 3rd, 2018. And this is in the morning right before the test. As you can see here, I have the cursor set to 11:45 a.m. And let's kind of look at the backdrop of the market. So here's the great financial crisis. And then there was a pretty big correction in the stock market here towards the back half of 2015 going into 2016. And then we started another bull market run that went all the way up until the beginning of 2018. The market struggled a little bit early in the year, and then it continued to rise up, kind of a little bit of a melt up that the stock market was in. Here's what the charts look like. So you had that turbulence, choppy market early in the year. You had a kind of a parabolic move at the year open. Stock market kind of tanked a little bit and then consolidated, started to move up, and it seemed like a normal bull market for a while until you have this day right here. So you're near the highs on October 3rd, 2018. Let's have a look at what happened later in the day. So that test occurred at 2:18. Let's see what it looked like at the close. So I'm going to go to 16:52, which should be after the close, and we can see what the action was. And boom, right there. So 14:20 here on a 5-minute chart. You look at that candle here from 2:20 p.m. when the test of the emergency system occurred. Something happened. Not even 10 minutes later, the stock market began to decline, and it went down to the lows of the day and went right through them. Now, on the larger chart here, which is the 1 hour that I have it set to, it doesn't look like that much. It looks just kind of like a midday drop. And then if you can see here, the candle looks pretty normal, even though it's a red candle. But let's take a look at what happened after that in the 5 days or 10 days following. So let's go to advance it 2 weeks to the 17th. Ooh, and as you can see here is, let's see, that is October 3rd is right here. This is where that drop initially occurred. And the market kind of grinded lower over the next few days. And then on this day, we had a pretty big, significant down day. We went from around the upper 280s down to 275, near 275. So we had like a 5% down day. And then that bear market continued. So let's go all the way to the very end of that year. I'm going to forward it to December 31st of 2018. And as you can see there, the market went down pretty far, bottomed on Christmas Eve. Almost 3 months of bear market that you got. So let's try to see if anything significant happened to signal why the market bottomed on exactly Christmas Eve and then started rebound after Christmas. When I go back and look at the news that occurred over that general time period, it seems like on that Monday, which was Christmas Eve, Trump, who was the president then, was criticizing Powell and complaining about the interest rates being raised. Let's take a look at what the interest rates looked like at that time. So here's a look at the interest rates from 2018, what was going on. We still had a normal yield curve, but the Federal Reserve was raising interest rates during that time. As you can see here in the bands, this is where the Fed funds target was. So near the beginning of the year, in March, we still had a 1.5% interest rate, and the Fed raised it several times. They did several hikes during the year, so that by October, when they did the emergency test, we were at a 2.25% interest rate, and then by Christmas they hiked again, and then we were up to like 2.5. And Trump was calling out Powell, saying that it's because he's causing the stock market to tank by raising interest rates like this. And I can imagine this was only 2% that they were at. Right now, we are above 5%. Now, going back here to 2018, what happened to the Fed funds rate in 2019? Where did we end up? Oh, so they lowered interest rates again. Let's take a look at how quickly did they do that. Did they bring it down in January? No, January, same. February, when did they start lowering rates? Looks like in August they started to bring rates down again. So the economy was barely able to handle 2% interest rates, or at least the stock market threw fit when we got up to 2% from 1 or 0% interest rates. But anyway, so the bull market actually did resume at that time. Forward this to March of 2020, and we could see how it worked out. So right here at the bottom, we had that December 24th, Christmas Eve, the market bottomed, and then the bull market kind of resumed, and it started heading back to its normal course where it was up all through 2019, all the way up until when the cerveza sickness hit. So let's take a look at where we are today. The markets had a pretty rough week here. As you can see, we're near where the highs were, the all-time high, 479 on the SPY, and we're currently down 8% from the all-time high. But today the market was down quite a bit, and I think one of the things spooking the market right now is the interest rate yield curve. Something going on is that the long end of the curve is moving up, and this is called a bear steepening. Here is what the bear steepening looks like. So as you can see, over the last several months only, from June of 2023, the 10-year yield has risen from 3.75%, and now it's up at above 4.5%. And it just keeps on going up. A lot of people think it's going to hit 5% very soon. And this has absolutely clobbered the TLT ETF, which invests in long-term, long-duration treasuries. So the inverse relation of treasuries and interest rates, the higher the interest rate on the long-duration treasuries go, the lower the value of the bonds that you're holding, because the price has to go down to accommodate that higher interest rate at the market rate. And TLT being invested in the long duration treasuries, a lot of it being 10-year treasuries, is getting clobbered by the interest rates rising. It means that treasuries become a more attractive investment for investors, so they pull their money out of stocks, go to treasuries, and the debt refinancing cost for companies also goes up. So if they have to roll over debt and the entire yield curve is higher, that means that that business could only refinance debt at a higher rate, meaning that they're going to be paying more interest and have less profits. But anyway, so from a fundamental perspective, I think that's something that's spooking the market right now and kind of setting up the backdrop for this bearish sentiment. So there's a fundamental reason related to interest rates that the market's going down. We're still kind of chugging along near, we're down a little bit, but we're still kind of chugging along near the all-time highs in the S&P 500. Who knows what happens after the presidential test tomorrow? If that alert is going to somehow trigger another sell-off that goes into Christmas Eve, I don't know. It seems pretty interesting. The backdrop is very similar to what happened last time 5 years ago when they did this test. So anyway, what do you think? Go ahead, and I'd love to hear your thoughts in the comments. And if you subscribe to my channel, it'd be really helpful because I'm trying to build up this channel and turn it into something. And don't forget to like the video as well. See you next time.